Alright, let's talk a bit about potential performance. I see a lot of traders moving their stops to break even at random amounts at random times. Essentially what they are doing is that they are costing themselves a lot of money. They are not having any advantage by doing so, and whenever you interfere with your trades, which is not playing a set and forget strategy, then you need to be very, very certain that that strategy is decreasing your account volatility while not taking away from your profits so much. And what most traders do is that they give up a lot of potential profit by moving their stops to break even too early, closing out trades before the trade profit is hit, and so on. So what I suggest for every beginning trader is to trade a set and forget approach and simultaneously test various take profit scenarios on demo, of course, and various trade management scenarios, and then you will very quickly find out what works better and what doesn't, because the money is made in your exits and not in your entries, as so many people think. If you have a good trade management approach, even with shit entries, you can still make money. That's my point here. So what we have right here is the trade simulator of Edgewonk. We have performance metrics here which are quite reasonable. Usually I would say for a 2-to-1 strategy the win rate is hovering around 40 to 50%. For the sake of simplicity here we will take a 50% win rate, and this is simulated over 500 trades. So this is roughly a year of trades for me. I have around 40 to 50 trades a month. So this comes pretty close. Assuming we start with a $10,000 balance and a 1% risk, we will turn this $10,000 starting balance into 45,000 to 26,000 roughly in a year. We can retest the simulation to see how statistically viable it is. Okay, here our lowest segment would be around 26, 42, once more, 42 and 27. Okay, so you can see that somewhere in this expectancy corridor will be our profit for the year, and that is of course stellar. Yeah, so if you can keep these performance metrics, which are quite reasonable with my strategy, then as you can see, nothing is impossible. And now let's assume that every time after you reach 1 hour profit, for example, you take half the position off and let the remainder run until either it goes into your take profit or into your stop loss. So what you basically do is that you are diminishing your profit capability to 150, and let's say 50% of the trades still go into your stop loss. So we decrease this to 75. Roughly what happens is that we decrease our profit, our potential profit, by around $10,000. The upper barrier of this expectancy corridor is around 32. Try it one more time. Yeah, 32,500, and the lowest is 25,500. Are you decreasing volatility by doing so onto your account? Not by much. It is an illusion, basically. And I can understand that people want to take partial profits on their trades, especially when they are new and they want to gain confidence in the strategy. And that is really the only time when I advocate taking partial profits, is when you are trying to gain confidence in that strategy, or you are having trouble letting your trades run. Taking a bit profit off the table will enable you to stick to your strategy easier. That is really the only time when I advocate doing so. But most of the time, a trading stop approach without taking any profit off the table will be more profitable for you. I have yet to see an approach where taking half of the position off or more is more profitable in the long run than not doing so. And it is mathematically, it's quite a complex subject. Basically what you are doing when you take off certain portion of the trade is that you are trading two positions essentially. You have to treat those two positions as individual trades not as a single trade. That is what most people don't really understand here as well. And of course, the better your performance is, the more detrimental it is for you to take partial profits. For example, a strategy of 300% win rate, a strategy of 3-1 with 50% win rate will make you a rough 70,000 or 60,000 a year on a 10,000 account, which is of course quite unrealistic. But if you take partial profits here after 1 hour, then what you will get is 200, so 50 plus 150 from the other position, and the lost loser will still be, let's say, 75. If you half of the position that run into your 1 hour you take off, half of the position, so your profit potential suddenly is only around 45,000. You're basically costing yourself around $20,000 each year by doing so. And you're not really decreasing account volatility by doing so. So what can we do to find the best trade management approach? It's very simple. With Edgewonk, we use the management tab, so we can very quickly find out whether our trade management approach is making or losing us money. And the other thing we do is that we use the alternative strategies to test alternative take profit strategies. The entries stay the same, and we test hypothetical stop loss and take profit scenarios, and then you will very, very quickly find out that taking partial profits is costing you money indeed, and moving your stops to break even is most of the time costing you money as well. In fact, for most of you, touching your trade after opening it will cost you money. It took me a very long time to find a trade management approach which is basically not losing me money, but at the same time decreasing account volatility, or it's even making me money, so to speak. And it also heavily depends on your trading style, on your risk-reward ratios, because if you only trade 1-to-1 risk-reward ratios, then there is not so much room to mess up a trade, so to speak, with trade management. But the higher you go with your risk-reward ratio, the more room you have to mess up the trade with your trade management. So moving stops to break even, trading a stop is an art in itself, and it cannot be 100% probably simulated in the simulator like here. But I just did this to show you that taking partial profits will cost you money almost always, and everything else you have to do with the management tab and the alternative strategies tab, or you simply follow my trailing strategy, which is trailing the price behind highs and lows and behind pivot points and trying to let it go as far as it can. And sometimes we take profit when the price is extremely overextended. In another video I will show exactly which alternative strategies I am testing right now. If you want to test the same as me, then be my guest.